You're listening to the Unlocking Africa podcast.
I've helped create a number of books of business in the political and credit risk class, and now doing that at Africa Specialty Risks. Political and credit risk insurance is designed to help those engaged in foreign direct investment and trade with other countries. What we actually find is that without insurance support, quite often opportunities never actually materialize as the risks become unmanageable. Our underwriters are either from Africa or have lived and worked in Africa. Africa is abundant in raw materials required for the new battery economy.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we find amazing people who are doing amazing things to unlock Africa's economic potential. Today, we have Amir Hussain, who is a senior underwriter of political and credit risk at Africa Specialty Risks. Welcome to the podcast, Amir. How are you?
I'm very well, Teresa. Thank you so much. It's a real pleasure to be here with you. As you know, we've been meaning to do this for some time, and I'm really happy that we've managed to catch up now.
Definitely. We've had quite a few conversations regarding the work that you're doing and obviously the podcast. So it's great that the date has finally arrived, and I'm looking forward to today's conversation. I know you do listen to the podcast, so you probably already know that I like to start from the beginning. So I was hoping before we get started, you could introduce yourself and tell us a bit more about Amir Hussain.
Absolutely. Thank you, Teresa. Look, I read law at university, but decided to become a chartered accountant as I really liked working with numbers. During my early career, I worked in corporate finance as well as banking, both as an analyst and a relationship manager. I only really found insurance in 2014 when Brit Insurance was looking to start a political and credit risk business, and which I joined as a senior analyst. I'd always been interested in politics and history and realized that this role in this industry spoke to my interests, my aptitudes, my skill sets, and was fun at the same time. Since then, I've helped create a number of books of business in the political and credit risk class, and now doing that at Africa Specialty Risks.
Fantastic. You've given us a great insight into your early life, reading law at university, then transitioning into working as an accountant, and also your interest in politics and history, which has led you to being a senior underwriter of political and credit risk. So for the people out there listening who aren't quite clear on what your role involves, what does it mean? What do you do day to day as a senior underwriter of political and credit risk?
Great question, Charles. Great question. So let me define it first. Political and credit risk insurance is designed to help those engaged in foreign direct investment and trade with other countries, and in our case, Africa. It does that by mitigating against political and credit risk. So now if we go on and define what these terms mean. So what does political risk mean? Political risk refers to adverse government actions against foreign businesses and can include risks as overt as nationalization or expropriation. But it can also include discriminatory actions preventing the foreign business from operating, or events which result in the business being forcibly abandoned. Within the sphere of political risk, other insured perils have also developed over time, and these include the risks of, say, political violence, for example, pre- and post-elections. Many investors also worry about the risks of not being able to convert from local currency to hard currency when they need to repay or service debt or pay dividends. This peril can also be protected against using what we refer to as currency incontrovertibility and risk transfer cover. And that also comes within the remit of political risk insurance. Now, credit risk, on the other hand, I think is better understood by most people and really relates to non-payment or non-performance cover under a trade transaction. Here, we provide two types of cover. So the first type relates to protecting against public entities, for example, the ministries of finance or other ministries, or parastatals such as national oil companies,
Yes.
where the concern is that they may renege on their payment or performance obligations. Now, the second type of credit risk naturally relates to private entities, and we're covering our insureds against the risks of goods or services not being paid for, or indeed the non-delivery under contracts that these private entities have made. I'll just add a little bit more. I mean, that's what political and credit risk insurance is. But how do we do that? I guess, in short, it's really about understanding countries holistically from an economic, political, social, and historical perspective. We do that by analyzing legal, tax, operational security issues and try to understand how they impact a particular transaction or business at hand and how to price that risk. Finally, I guess we also spend quite a lot of time undertaking credit analysis, which really is about poring over financial statements and understanding the drivers for the success of the businesses that we take risk on. I hope that gives our listeners a feel for what political and credit risk insurance is.
Fantastic. Thank you for that, Amir. So you've detailed that your role involves, I guess, protecting those who are involved in foreign direct investment and trade. But I was hoping we could go into a bit more detail regarding how you entered the world of political risk, but in Africa. Was this something that was intentional or something that you fell into?
Great question. Tersa, look, I wish I could tell you that it was by plan.
No problem.
Yeah, I mean, frankly, I wish I'd found political risk insurance earlier in my career. What I can say is that my experiences reading law at university, my interest in history and politics, my work as a chartered accountant, as a corporate financier, as a banker, really coalesce to provide experiences and skills that are, I would say, essential to underwriting political and credit risk. Genuinely, I think for me, the role is a calling, and I take it very, very seriously.
Brilliant.
And that's not only because it's interesting and fun, but also I genuinely feel that it's important in enabling emerging markets, developing markets, and in our case, especially Africa, to grow and to alleviate poverty. So I think I'm in the right place, doing the right job. But like I said, not by plan, but I think it's all come together.
Fantastic, fantastic. Earlier on, you mentioned that obviously your role involves protecting those who are involved in foreign direct investment and trade. I know that the company uses the tagline protecting Africa. So, with that in mind, can you tell us how Africa Specialty Risks is protecting Africa? What is it protecting Africa from?
Absolutely. Look, before I go into that, let me touch a little bit on Africa Specialty Risks as a business. So, we are an insurance and reinsurance company, which was set up to cover specialty risks across Africa and now also the Middle East. We started in late 2021, although we didn't actually write any business or insure any risks until February of 2022. Our founder, Makir Shah, secured the backing of Helios Partners, who are the largest private equity group focused exclusively on Africa. And through Helios Fund 4, we are actually backed by British International Investment, FinDev, as well as Fairfax. I guess from a standing start, we've grown to just under 70 employees in the last 2 years.
Amazing.
Who are based in both our London as well as our Mauritius office. We have staff in Paris and Nairobi who work in the political risk team alongside myself. As Africa specialists, We actually spend quite a bit of time traveling across Africa. For example, last year I spent at least a week in each of 5 countries in Africa. And I'm pretty certain that quite a few of my colleagues are on the ground as we speak right now, ensuring that we can support our clients by really understanding their insurance needs and the risks they face. I guess the final thing I would say on Africa specialty risks before going on to the question is that in the past 2 years, we've written in excess of 100 million of premium. I think that's a really good indicator of our progress and the value we have offered the market. We really have underwritten one or another type of risk in almost every country on the continent. So now moving on to your question about protecting Africa and what we're protecting Africa from. We provide our insured clients protection from risks or perils that they are concerned about in running their businesses in Africa. So you've obviously picked up on the fact that I'm referring to specialty risks. And, what are these? So these can include classes of business, including, and these are ones that we currently operate in, include property, energy, construction, political violence, kidnap and ransom, liability, parametric insurance, as well as political and credit risk, which I'm representing here today. We've also recently added to our portfolio by also now covering treaty business. So that's how we're protecting Africa.
Interesting. So you've detailed the solutions that you provide protecting Africa. And I know sometimes or within this conversation, we can get tied down talking about risks and it can sometimes sound a bit negative because we're not looking at the opportunities. From your perspective, do you think trying to sell the risk could have a negative impact on the continent whereby we're not highlighting the amount of opportunities actually on the continent?
Not at all. I think what we're doing is actually enabling our clients to avail themselves of the numerous opportunities in Africa they have by actually mitigating some of the risks that arise out of those opportunities. So we're actually enablers of opportunity. What we actually find is that without insurance support, quite often opportunities never actually materialize as the risks become unmanageable. So, for example, in political and credit risk, we find that without insurance, some transactions are not bankable. Banks won't be willing to lend under them, or the risks perceived as so high. Therefore, the business isn't launched or the investment isn't made. Therefore, I think we need to talk about the massive opportunities there are in Africa, and I'm sure, we'll come to that. But I think, we see ourselves as having a very positive impact as an enabler of opportunity.
Thank you for clarifying that. Going back to my question, around every risk, there is an opportunity, and vice versa. Behind every opportunity, there is a risk, and it's about mitigating those risks or enabling the opportunities. So, if you look at the people who access your service, what type of person or company are your services intended for, and what are the benefits or value of the service that you provide?
Yeah, thank you so much, Tersa. I think that's a great question. So, in political risk, our clients are businesses who are engaged in foreign direct investment, as well as banks. I should clarify, those businesses are effectively providing equity or their own money to start businesses, as well as banks who are supporting in those investments through loans. We also have clients who are contractors who may be operating fixed or movable equipment in the country to perform their roles in rolling out that investment. So in political risk, our clients are businesses who are contributing equity, banks who are contributing loans to those investments, as well as operators who are actually on the ground performing or carrying out the foreign direct investment. Within credit risk insurance, it's businesses which trade either with public or private counterparties in Africa. For example, we do a lot of business with commodity traders in the oil, metals, and soft space, as well as other trading business. And also in credit risk, more often than not, it's also banks which lend to businesses and governments across Africa. Interestingly, we also serve large multilateral organizations, including development finance banks of the likes of Afrexim Bank or TDB in Africa. Now, their goal is to provide or facilitate development through loans in Africa, and we support them by effectively providing a backstop insurance solutions to the risks that they are taking. The reason why I mention this is that by doing so, we're actually, in many cases, supporting some of the smallest businesses on the continent by ensuring the loans that local banks secure from the development financial institutions. So I guess my point is that in many ways, whilst it can seem like we are supporting only large foreign businesses, we are in effect also supporting small local businesses through the banks to whom we provide political credit risk insurance. I would also say here that when we do choose clients whose risks we are taking on, we do typically look to see some track record is developed by them, because I think it's important to partner over the long term with businesses who understand really the lie of the land in Africa and are able to navigate the challenges that the continent presents. So, those tend to be typically our clients, and that's how we support them.
Thank you for that, Amir. So you've detailed the clients that you work with. Earlier on, you mentioned the company launched in 2021.
Correct.
And you currently have around 70 members of staff. To deliver what you do does require extensive and strategic network of partners, I'm assuming. So can you tell us the key partners that you work with to gather the relevant data and also the services that you do deliver?
Absolutely. Look, I think it's important to say that ours is a people business. Our underwriters are either from Africa or have lived and worked in Africa. What we're trying to do is bring our expertise to bear in mitigating the risks that our clients have. Now, I guess moving on to our partners, and there's many, but one that I would specifically refer to is Africa Re. And it's a recent partnership that is developed. Africa Re provides us with capacity to underwrite business in Africa. As you can imagine, Africa Re, being the largest reinsurer in Africa, is obviously already active in insurance across Africa. But in specialty lines such as political and credit risk, which typically are marketed from London, Paris, Dubai, or Singapore, we are using Africa Re's capacity and our know-how to deploy it for the benefit of our clients and for African development. Teresa, you referred to data rightly, because information is pretty important for us to be able to do our roles effectively. So look, our data comes from a number of sources, but what I would say to you is that the most important of these is our on-the-ground knowledge. You know, we don't sit in London trying to underwrite a transaction in Accra or Nairobi or Cairo. We actually go and visit our clients regularly and really get a feel for what is happening on the ground. You know, sitting in London, poring over a set of financial statements, it's easy to get a negative view of the risks and turn it down. What we've tried to do actively is to avoid that, is to be an African insurer for Africa. And therefore, I would stress that the most important element of our data is actually on the ground knowledge.
Fantastic. That's really good to know. So you mentioned that your data comes from a number of sources, and the most important is the underground data that you do gather. So through this data, the company provides integrated forecasts of Africa's risk outlook. So I know this is a extremely broad question, but from the data you've gathered, what does Africa's risk profile look like in the near future?
So Teresa, let's talk about the risk outlook in Africa, because I think it's a really important question. First of all, I would say that the risks in Africa are myriad, and I will only speak to the ones relating to political and credit risk. I would also say that Africa is a large continent. However, on the whole, I think the key risk in Africa is that African economies are especially prone to external shocks. The reason for that is that the economies are largely dependent on the export of raw materials to earn hard currency. Therefore, when the prices of these raw materials rise or fall based on international demand, it directly results on an impact on government revenues as well as the current account and ultimately people's living standards. Integrally related to this point is the fact that very little value is added to these raw materials, be it crude oil or minerals or agriculture. Therefore, in terms of trade, Africa can't earn the hard currency it needs to spend on education, infrastructure, and development. Because it really can't earn enough through exports, and there is a limited local financial market due to the size of the economies, African countries are very much dependent on foreign capital, and in particular, borrowing in hard currencies such as US dollars and euros. Now, today, with interest rates increasing across the world, largely to counter inflation, lending into developing and frontier markets is being reviewed and higher interest rates are being charged. And indeed, refinancing or financing is becoming quite difficult. So in a recent example of that we saw was Ghana, where we saw that foreign currency denominated debt actually increased by 7 billion simply because of the fall in the cedi US dollar exchange rate. So effectively, Ghana's debt increased by that amount, not because they borrowed more, but quite simply because it was denominated in foreign currency and the value of the Ghanaian cedi declined. Now, this resulted in the country defaulting or declaring that it was unable to meet its payments. We're potentially seeing other countries with similar problems at the moment. So from an economic point of view, I would say that those are the main challenges that many African countries are currently facing. I think the other key risk, and sadly it's a risk that's increasing, is the potential for violence, whether ethnic, nationalistic, or political. Increasing across the continent. I mean, this inevitably has an impact on slowing economic growth by reducing investment due to the uncertainty it causes. An example of that is that we're actually a little bit concerned about Nigeria at the moment with the upcoming elections.
Thank you for that, Amir. So you talked specifically on political risk and mentioned that African economies are vulnerable to external shocks. So if we look at internal factors in terms of elections, so 2023 looks like quite a pivotal year for African elections. You've got Zimbabwe, Gabon, and maybe Libya who are having elections in 2023. So how does the influence or impact of elections determine the work or the way that you operate within Africa?
Actually, Teresa, elections have a significant impact on the risk profiles of countries that we see. The reality is elections in Africa can be quite messy, with a potential gridlock pre-election when governments no longer make decisions. During elections, there's the possibility of violence as well as post-election. Specifically post-election, especially if incumbent governments change, there's a possibility of a significant policy change and overturning of previous investment decisions. So when that happens, foreign businesses, especially foreign businesses, come under great scrutiny and are at the risk of having contracts overturned or indeed less favorable terms imposed on them. So if we take an example of a country going through that process, and I think, Nigeria is, again, probably the best example of all of these risks materializing. So last year in Nigeria, prior to that election, last year the government made a requirement that all ministers and public officials who intended to contest in this year's election declare that publicly. And I think it would be fair to say that that resulted in an element of gridlock. The reality is that we are concerned about Nigerian elections as there is really an ethnic, religious, regional, as well as separatist elements in it. We're hopeful that they will play out peacefully as they did in Kenya last year. Look, the reality is that Nigeria has significant economic and political policy challenges that really need to be met. These include, for example, subsidies and the government's responses to the continuation of subsidies, which potentially are crippling the government budget, whether there's likely to be a change in the multi-exchange rate framework, whether and how to privatize and clean up state-run entities. Actions will be needed on all of these fronts to reduce inflation, bring government budget deficits under control, balance the current account, and really to ensure that Nigeria continues to pay its creditors. But the reality is that will require political will. Very difficult decisions will need to be made, which have a fundamental impact on the politics as well as the economy of the country in the ways that I've just outlined. So really, elections as an internal driver of risk are pretty important.
Thank you for that, Amir. You detailed that post-election potentially poses the biggest risk to what you do and can have huge economic impact internally. I know globally we're seeing economic downturn, we're seeing rising inflation, depleting foreign exchange reserves, and devaluation of many African currencies, as you mentioned with the CD. This is probably an obvious question. What political risk does this expose the continent to, from your perspective?
A whole load of political risks, actually, Tersa. I guess the first element is that these international economic events directly impact government finances in the way that we earlier mentioned. So when, for example, African governments' financial solvency is impacted, it tends to stretch these governments, and then they have a tendency to lean heavily on private organizations and investors in the country, largely to try to get more benefit out of those relationships. So, for example, taxes may be raised or indeed fines levied, and believe it or not, sometimes even for spurious reasons, largely because it puts government finances under pressure. I mean, these are base political risks. I mean, if we take as an example your point about the devaluation of currencies, I think, that is a major driver of risk because it significantly discourages investment. The concern amongst investors, I guess, is that they invest millions and leave with thousands simply because the currency is weaker. So no matter how successful their business is on the ground in local currency, in foreign currency, it's actually a failure. This means that businesses which have already invested in the country are probably less likely to do so. And those who are thinking of doing so are probably less likely to go ahead. Ultimately, the impact of these international events, and I guess the greatest risk from a political point of view, is the possibility of sovereign default. When a country defaults, it really requires a reset. More often than not, the IMF will be called in to provide support, often at concessional rates. But the cost of that will be the inevitable austerity that is imposed on the country and the population. So the IMF will more than likely require a government to balance its budget. And this will mean potentially reducing subsidies for the poor, reducing government employment, increasing and widening the tax base. The ultimate impact on the population is really harsh. What does that result in? Unfortunately, often it results in internal conflict and political violence. I would say that risk of sovereign default as a result of events outside Africa, again, I would go back to that being the crucial risk that the continent faces. And, we talked earlier about potential ways out of that.
Thank you for that, Amir. I know we've been guilty of discussing mainly risks today when it comes to Africa. So if we look at the positives, the opportunities, what opportunities around these risks are you seeing in Africa?
Yeah, thank you, Teresa. I think it's good if we move on to the opportunities because there's a whole load of them. The key opportunity that we're seeing at the moment is the fact that Africa is abundant in raw materials required for the new battery economy. The reality is that international powers, the Chinese, Americans, Europeans, are trying to secure supply, partially in order to achieve net zero, but also global warming targets of 1.5%. So the demand for these minerals is large and will inevitably rise. How does Africa potentially benefit from that? Look, the reality is, for example, the DRC has 50% of the world's cobalt reserves. Gabon has 15% of the world's manganese. South Africa apparently has 91% of the world's platinum. Now, in order to take advantage of that, a number of things have to happen in Africa. And principally, Africa needs to ensure that it doesn't suffer again from the resource curse that really plagued it when it was trying to take advantage of its oil wealth, so to speak. I guess what needs to be done in order to take advantage of this opportunity? I think there needs to be an expansion of renewable power. I think there are attempts to do that. And, Africa is again, could potentially be a major supplier of renewable power. Egypt, for example, has 11, 12 hours of sun during the day. It has wind of a certain miles per hour, which is very conducive to wind power. I think in order to encourage investment in this area, it needs to be exempted from tariffs. It needs to be located in areas of political stability. Africa needs, where it hasn't, African countries need to join international arbitration schemes. But I think most importantly, there needs to be a joint African approach to taking advantage of this particular opportunity. And here, I guess I would refer to the Continental Free Trade Agreement, which, is designed to enable Africa to trade within itself and, I guess, create value chains in manufacturing internally so that value can be added to potential exports. What we don't want is Africa just to export lithium in its purest form. We want there to be an ability to refine it so that value can be added to it. And that can only really be done if African countries act in concert, hopefully under the Continental Free Trade Agreement. One other potential opportunity that I would highlight, which has come out of recent events, is the fact that Africa has vast amounts of arable land, but the policy framework is not present for large-scale farming. So if we look, for example, 50 years ago, Angola was a continental-wide agricultural producer. Today, it imports $2.4 billion of food annually. Why is that necessary? I mean, the Ukraine war has shown the fact that food inflation and food insecurity is a major risk for the continent. But when the continent has the ability to produce its own food and be self-sufficient, surely there's a massive opportunity here to do so. And I think, it's incumbent upon African governments to get their policies correct and to encourage that.
Fantastic. Thank you for that. You touched upon this slightly, and I was hoping we could go into a bit more detail. So, how can African economies position themselves so that they are less exposed to the risks that come with these opportunities?
Yeah, I think in that case, let's talk about a couple of examples. Look, even in the midst of difficult economic circumstances, there are countries in Africa which are performing really well. And really, three that I would highlight are the Ivory Coast, Benin, and Senegal. So let's see how potentially these countries have protected themselves from these external shocks. So if we take the Ivory Coast, I mean, the reality is the government has created political stability coupled with pro-growth policies. So as a result of that, it's benefited a lot from international goodwill, resulting in significant concessional lending. And most importantly, which has been deployed in a developmentally enhancing way. So by that, I mean project returns have been higher than the cost of funding. The result is a diversified economy from metals to agriculture and now increasingly oil. Look, of course, even the Ivory Coast, it has its security concerns in the north. But the reality is that the government has the funds to potentially tackle that. And because it's a more diversified economy, the likelihood of external shocks resulting in potential sovereign default is significantly lower. If we take Benin, President Talon has created a politically stable environment, albeit there is concern, very genuine concern about suppression of political opposition. And I'm sure when the elections happen in 2026, there will be concern about potential political violence resulting from that. But if we leave that aside for a moment, there is an environment of political stability and also a business-friendly environment for foreign investors. Again, that has encouraged record investment and extensive foreign borrowing. Currently, there's a landmark IMF program, which is helping with revenue mobilization via a broadening of the tax base, as well as fiscal consolidation to ensure that the government is able to balance its budget. The country actually performs really well on parameters such as its tax regime, the ability to convert its currency into hard currency, as well as on expropriation. And all of these risks are perceived as being quite low. So the reality is there's a sound fiscal and monetary policy that is being deployed. Money is being spent on infrastructure in key areas such as the port of Cotonou. So again, the intent here is to create a diversified, broad economy. And I think the country is moving in that direction. The final one that I would specify is Senegal. I mean, about 8 years ago, the country realized that it had reserves of oil and gas. And, President Sall, what he chose to do was to prioritize a way to get this gas and oil into an operationally ready state by making upfront costs for oil majors cheaper. He did that, for example, by enabling FPSOs to be used rather than costly land infrastructure. He also did that by agreeing with the Mauritanian government the split of reserves. Now, these are two countries with very different cultures, but the government realized that there was a need to exploit this natural reserve. And the best way to be able to do that was to resolve the issues that may arise. As a result, the world is actually courting Dakar, especially given its proximity to Europe and the fact that lack of Russian supply has meant that Europe needs to secure its gas and oil from elsewhere. So I'll stop with those three countries. But I guess, whilst each of them have their own problems, I would see a huge element of success in each of them. And I think it shows that even in difficult environments, whether created locally on the continent or indeed due to world events, there is a way forward.
Fantastic. So we've spoken at length about the current risks and positive trends that you're seeing in a range of African economies. So if we look at those trends and where they will lead us in the future, where do you see Africa in 5 years' time from a political risk perspective?
So I'm hopeful that Africa will be more democratic and economically more secure. I think in answer to this question, we sort of have to look back at history a little bit. In the last 20 years, say from 2003 to 2021, African GDP increased by 3 times. I believe the figures are around 800 billion to 2.7 trillion.
Yes.
In the 20 years prior to that, it actually grew by 2 times. Now, your question is next 5 years. I'm really hopeful that there's an acceleration of the growth we've seen in the last 20 years through initiatives such as the Continental Free Trade Agreement. If we look at other parts of the world, China, for example, in the last 20 years grew by tenfold, if not more. The reality is that Africa has the potential to be a manufacturing hub through proper implementation of the Continental Free Trade Agreement, just the way China did 20 years ago. So there's no reason why that acceleration can't take place. And it's actually necessary that that acceleration takes place given the growth of our populations. Look, in summary, I guess I'm hopeful it will be economically more secure and also more democratic.
Fantastic. I'm hopeful too. And I think the African continental free trade area definitely holds a lot of hope and potential in terms of the future direction of the continent, whether that's in the short, medium, or long term. So if we look closer to home, where do you see yourself and Africa political risk in 5 years' time? I know you've already achieved quite a lot in a short space of time. So where do you see yourselves in 5 years' time?
Sure. So, Teresa, one of the goals that we set ourselves was to actually try to create a local indigenous political and credit risk industry. As I said before, a lot of the business that we do comes into London, Paris, Dubai, Singapore. It's really outside Africa. One of our key goals is to be able to offer African corporates and African banks risk mitigation solutions locally. We feel that there's a huge opportunity arising out of the Continental Free Trade Agreement, whereby African countries will actually start trading with other African countries. And in order to facilitate that, they will require risk mitigation solutions, be they insurance or other types of solutions. And look, we're really quite enthusiastic about being there on the ground, and we really hope we're instrumental in helping local business reduce their risks.
Quote of the week.
As people, we often have quotes, mantras, proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
Okay, interesting. Okay, so look, first of all, I would say these are hard times in Africa and the world. The reality is that we find ourselves almost in a state of perma-crisis. We've seen one crisis after another. What I would say in response to that is change and difficulty create opportunity. And therefore, industries such as ours, this is actually quite a positive time. In light of that, I'm not going to give you a mantra for going through difficult times. But what I will say is that I think we all need an element of courage to go through unfamiliar territory. For us, that unfamiliar territory can be opening up a new market, creating a new business. And I'm hopeful that that courage really will help us build our business through helping others.
Wise words, and I agree 100%. So thank you for sharing that with us, Amir. As we're coming to the end of today's conversation, I was wondering if you had any closing remarks, any final calls to action for people who are interested in what you do, or, who want to probably look a bit deeper, have a conversation. Any closing remarks, final calls to action?
Absolutely. What I would leave our listeners with is I genuinely believe that Africa offers an abundance of opportunities. Please don't be put off by the perception of risk or the difficulty. There's always a way to share risk with others to facilitate business. Please find a way to mitigate your risk. That may be through insurance or other means. If it is insurance, we're always here. We're happy to pick up the phone and speak to you and meet you in person, especially in Africa. So anything we can do to help, we will.
Fantastic. Thank you for that, Amir. That was a great conversation. First-class insights from a first-class guest. Once again, thank you for your time.
Teresa, it's a pleasure always speaking to you. Thank you so much.
And we will speak soon.
Great. Teresa, thank you again, and look, have a great day.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.